Question. If you stopped working today, how long could you survive until you had to go back to work? In other words, do you have other money coming in to pay the bills, or are you only relying on your 9 to 5? Several years ago, a wrist injury made me realize that if I'm not able to treat patients, no other income was coming in. Not too good. This event was actually the catalyst that started me down the path to understanding that how you earn money was just as important as how much money that you earn. Let me say that again. How you earn money is just as important as how much money you earn. After dental school, I thought it was all about making the most money you could. I've now learned that the way I'm earning money, which is actually I'm a self-employed periodontist, has also put me in the top tax bracket there is. It seems that instead of always focusing on making more, I should start focusing on earning the right way by working smarter, because as a periodontist, without the use of these, I'd be out of business. If you go through your entire career relying on only one income source, that's an accident waiting to happen. But don't worry, because in this video, I have the exact solution for you, and it's actually called real estate syndication, which is a way you can begin to replace your active income with passive income without dealing with headaches from tenants. If you're new here, I'm Dr. Jeff Anzalone, a periodontist from Louisiana that's on a mission to get you out of the rat race with passive income creation. Go ahead and download the passive income guide I put together just for you below this video. Let's get going. If you're new here, you're probably thinking to yourself, real estate syndication, what is that? What is a real estate syndication? Well, the concept of syndication is really not that difficult to grasp, especially if you've played poker before in the past. Now, in a syndication, you're actually throwing money into a pot with others, with the difference being in poker, you're trying to win the entire pot. But in a syndication, you're able to split the pot with the other players, who are also called investors, in a deal. So you're splitting the pot with other investors in a deal, including the dealer. And the dealer in this instance is the syndicator or sponsor. We'll get into what exactly they are in just a minute. Now, this pot of money is used to purchase property like apartment buildings, hotels, self-storage, etc., and hold for an extended period of time. So by joining forces with other investors, this type of investing becomes a team sport where everybody wins. Now, you may be asking yourself, Jeff, why haven't I heard about these types of investments before? Well, many of my new Passive Investor Circles members frequently ask this question that are actually just getting started into the real estate investing game. Now, in the past, only those that fell under the wealthy individual investor category had access to these types of deals. But ever since the Jobs Act was passed, it has allowed the accredited investor access to passive real estate syndications. Now, before we get into how a real estate syndicate works, let's take a look at who's involved in the process. So let's get into the real estate syndication basics. So when I get the question, Jeff, how does a real estate syndication work? I typically will compare it to traveling on an airplane. Now, there's several groups of people whenever you travel on an airplane, such as the pilots, the passengers, flight attendants, mechanics, luggage, and ground crew. Now, using this analogy, the deal sponsor of a syndication, they're the pilots of the plane. You and I are the passive investors. We represent the passengers. Even though both groups are traveling to the same destination, each have considerably different roles during the process. Now, if surprises occur during the flight, such as unexpected weather conditions or engine problems, lights start going off, this and that, it's the pilots who are responsible for the flight. So they're the ones who will monitor and update passengers during the flight, such as, good afternoon, this is your captain speaking. We've hit an area of turbulence, but we should be through it shortly. I've always wanted to say something like that. Anyway, it's the passenger's job during this to sit back and allow the pilots to make the decisions on what's best on flying the plane. Does that make sense? Now, hopefully you now get kind of a gist of what's involved during this process, as real estate syndication deals work much the same way. There's several groups of people that all share a vision, and they want to improve a particular asset, such as The different groups are the sponsor, the general partner, there's the passive investors, you and I, there's brokers in the process, property managers, etc. However, just like in the airplane ride, each person's role within the project is different. Let's take a look at the two main groups that are involved. The first one is the general partner or the sponsor. And they're the ones that typically find the deals. They're the ones that get the deals under contract. They arrange all the inspections. They evaluate all the different numbers. They obtain and acquire financing. And they go in, they make sure that the property stays leased, and they do management, or they'll outsource the management. Second main group is you and I, the limited partners. These are the people that are passively investing, and we have a limited risk. Remember, these people, they have no active responsibilities in managing this asset. Which leads us to the next question is, how do you profit from a syndication? So now that you understand the basic operation of how a syndication works, let's discuss exactly how you're able to profit investing in these types of deals. Now, profit in any type of real estate opportunities, regardless if it's a syndication or not, comes from two main areas. The first one being rental income, the second one being appreciation. Profit is generating when the operating costs of a property are less than the rents collected. This is known as the NOI, or the net operating income, and this represents the cash flow that's distributed to the limited partners via distributions. And these distributions are sent out either monthly or quarterly. They're also known as your passive income streams. Investors will receive an additional benefit, as typically a property's value usually appreciates or goes up over time. Because of this, the investors can net higher rents and earn larger profits when the property is sold in the future. So in order to kind of drive this concept home, let's use an example. So let's say that you've been researching about the syndication process and you decide to jump in and invest. And you find a group that's actually bought a 350 unit apartment complex in Charlotte, North Carolina for the price of $50 million. Now, everything that you're going to need to know about these deals is outlined in the PPM, or the private placement memorandum, which some people read the entire thing before investing. Some people skim through it. Some people don't even look at it. It's up to you. Now, in this process, you learn that the bank financing the deal actually requires 30% down payment, which in this case, it's going to be $15 million. So 30% of 50 million, $15 million. Now, of this amount, the sponsors are going to cover $1.5 million, and then they raise money from you and I, the limited partners, for the remaining amount of the required equity. In this case, it's 13.5 million. So 13.5 million plus 1.5 million equals 15 million. Now, a syndication is now formed, and the entity is an LLC, a limited liability company. And this is between the general partners, the sponsors, and it's in between the limited partners. So they come together, they form this LLC, and then they go in and they purchase this apartment complex. Now, in this particular example, the project hold time is 5 years. And during this time period, the business plan includes something called forced appreciation, as it was a value add deal. And what this means is they're going to go in, they're going to make a bunch of improvements to the property, such as upgrade light fixtures. Maybe they do new flooring, granite countertops, stainless steel appliances, new cabinets, signage. If there's a fitness center, they update the fitness center. If there's a pool, maybe they rehab a pool, upgrade the parking lot, paint, new landscaping. You get the picture. Now, during this time period that the improvements were made, guess what? This forces the appreciation. So you make it nicer. What can you do? The rents. Well, you're not going to lower the rents, right? You're going to raise the rents. Okay. So rents in this process are gradually raised to the same amounts being charged by other local apartments with the same amenities. Now, due to the increased rental income, the syndication sends the passive investors, you and I, a share of the profits, remember, from the rental properties every quarter. This was our profit number one. Remember, this was rental income. Now, after 5 years, in this example, a buyer is found, and then the complex is sold for $15 million over the original sales price, which in this case is going to be $65 million. Now, so at this time, the limited partners, they get back their initial investment, plus they get a share of that $15 million profit from the sale. Remember, profit number two is the appreciation. So that's how that you're able to benefit from this. So remember, during this 5-year hold period, all the passive investors, they receive, all the limited partners, they receive distributions, and in this case, quarterly distributions from the profit made from the rental income. And this is also known as mailbox money. Also, the group is able to use depreciation, which gives you some passive losses. Passive losses offset passive income. So in essence, you pay little to no tax on your distributions. Can you get that in the market? I don't think so. Now, there's several different types of asset classes that you can invest in within a syndication, such as multifamily, self-storage, mobile home parks, RV parks, land development, hotels, etc. So pretty much anything, any type of real estate that you want to invest in, there's probably a syndication out there for you. Now, personally, as a busy professional with 2 teenagers, I tend to be more on the risk averse side. Now, it's for this reason, I mainly focus, not exclusively, but mostly on assets that are already stabilized with a proven track record for cash flow. The returns, because of this strategy, the returns may not be as large versus, let's say, like a new development, but typically the risks tend to be lower. Now, speaking of investing, let's go over what's involved with the investment process. So let's talk about the different steps. If you've done this before, this is a review. If you've never done this before, well, then this is going to help you out. So step number 1, the sponsor is going to send out what's called a deal offering email that a particular investment is open. Next, probably within that email, they're going to give you the offering memorandum, which is also called the OM. It's the property description. And you're going to review it and then come up with an investment decision. Let's say that you're wanting to invest. So then the third step is you're going to submit the amount that you want to invest to the sponsor, typically via email. Then, not all the time, but most of the time, the sponsor is going to hold an investor webinar. And in this case, you can get more information and typically you can ask questions. The fifth step is, if you're going to invest, the sponsor is going to confirm your spot in the limited partnership, and then they're going to send you the PPM, which is the private placement memorandum, which is the legal document, which is probably 100 to 150 pages or more, giving you every single thing that you need to know legally about the project. All right. The sixth step is you're going to wire your money or send in a check. Most of the time, they encourage you to wire the money. The next step is the sponsor is going to confirm that your funds have been received. And then the final step is you're going to receive a notification once the deal closes, and then you'll get follow-up emails about what to expect next. Now, which leads us to probably one of the most important questions is how to find sponsors that you can trust. Okay, I get this question quite a bit. Hey, Jeff, how can I find a real estate sponsor that I can trust with my money? So let me break down 7 steps for you in order to evaluate a sponsor. Step number 1, track record. Now, the first recommendations when evaluating a potential sponsor is evaluating their experience or their track record. A couple questions you can ask is, how many deals have you actually closed? And then how many deals have you actually exited? This is the first time that you've invested. It'd probably be wise to choose a more experienced sponsor group that has had several deals go full cycle. This means that they have a property that was purchased in the past, it goes through the hold period, and then it eventually sells. Number 2, background check. Now, if this is the first time for you, again, to vet a new sponsor, probably be a good idea to have a background check performed. A lot of times this can be found online, like if there's like a podcast interview or if there's articles, sometimes they've submitted something online to the different real estate sites. You can actually go directly to their website to find out maybe their investment philosophy, their acquisition criteria. And then you can take a look at their portfolio of some of the previous projects that they've done. After performing these steps and you want to continue moving forward, it's now time to set up a call with the group. And the goal is actually to get to know them a little bit more on the personal level before deciding to invest. Number 3, cycle experience. It's important that a sponsor has experience with all 4 phases of an economic cycle, which are the recovery phase, the expansion phase, the hypersupply phase, and the recession phase. Your goal is to evaluate whether or not they face challenges, such as going through what we're going through right now, a recession. This is also your chance to ask them about their previous failures, how they've handled them, and what are they doing to mitigate those risks that they've had in the past moving forward. The main thing we want to understand is exactly what happened and what they did about it to prevent future issues. Number 4, risk evaluation. Typically, syndications are marketed as hassle-free or worry-free, but there's really no such thing as a real estate investment being risk-free. Each deal carries some degree of risk. As we talked about in step 3, ask the sponsor about the potential risk in their offering and what they're going to do to mitigate them. Most experienced sponsors typically are very forthcoming about any risk. They're going to discuss with you how they can impact the property, and they're going to inform you about the steps needed to help minimize them. Number 5, communication. When I first started investing in real estate in about 2016, seasoned investors made it a point to tell me how good their communication was between the sponsors they invested with and their investors. Having good, consistent communication is really imperative, especially if you're a new investor that has yet to establish a relationship with a sponsor. The sponsor should communicate with you potential risk in the anticipated timeline, any potential risk in the transaction, business plan. They should be forthcoming about the fees, the different underwriting assumptions that they're making, things like that. After the deal closes, sponsors should continue regular communication with their investors to keep them updated on the distribution schedule you're going to get, if it's quarterly or if it's monthly, and then any of the renovations that are occurring, what the occupancy is, etc. Number 6, tax reduction strategies. One of the primary benefits of investing in real estate is its favorable tax treatment. It's imperative that a sponsor has a very thorough understanding of the different tax benefits and uses strategies such as performing a cost segregation study for each project, and they take advantage of accelerated depreciation. And last but not least, you want to make sure that they have some sort of skin in the game. Because if the sponsor truly believes in their deal, then they should have some sort of sweat equity or skin in the game. This means that they're actually using their own capital within their deal. Now, if they don't believe in their deal enough to put up money, maybe you shouldn't either. Now, which leads us to the last thing that we're going to cover is, where can we find these syndication opportunities? Now, I can't stress this point enough. The absolute most important part of any syndication investment is not the deal. It's not the returns, not what you're going to make. It's not whatever their website tells you. The most important thing is the sponsor, the general partner. They're the ones that know how to find the best deals because that's their job. Unfortunately, I see too many people that are busy professionals, physicians, dentists, etc. They think they can continue to practice full time, yet they want to get into this syndication business themselves. They want to be active. Now, I must admit, I thought about this too until I realized the amount of support that you have to have from a team of professionals to make all of these deals work. Now, I work with groups that have dedicated people to find the deals, to underwrite the deals, get inspections, financing, manage a property, different properties, and much more. So if you plan on syndicating a deal yourself, it's next to impossible to have a full-time job. Something has got to give. Now, if you're interested in finding deals to invest in, then simply start by networking with other investors. This can be through conventions, meetups, meetings, etc. The internet It's a great way to begin the search process. A lot of good online forums, YouTube channels, podcasts, etc. And if you're too busy for any of those and you want to know what I personally invest in and have that opportunity to actually invest alongside of me, you can join the Passive Investor Circle with the link I've also put below this video. Now, if after watching this video, you've realized that you really suck with money like I used to, then head over here and watch this next one. See you there.